The stock market has risen as interest rates have remained historically very low. FANG stocks have led the charge to bring positivity to a rather dismal economy. If we look at the stock market of 10 years ago, 20 years ago, 50 and 100 years ago, we see a completely different situation. It hasn't just grown over time. We have seen completely different companies take over. Entire industries left in the dust. Big things have changed, and that should be reflected in your investments. You came here for the truth, so let me unveil that for you. Today we're going to do something a little different. I'm going to take out the pen and paper, and we're going to break a few things down. But first I want to start with this. The world's 10 largest companies since the year 2000. On the right-hand side, you will see the top 10 companies of the year 2000. Microsoft being on the top of the list at 2.5% of the total market cap. You had Cisco, GE, Intel, Exxon, Walmart, and more. And then we move forward into 2007, where Exxon takes the lead. PetroChina makes it to the list because, of course, we saw that commodities boom. Walmart, China Mobile, Microsoft, and a few others. After the financial crisis, we had some major changes. Exxon remained at the top of the list, and you saw what happened with many of the companies here, losing a huge amount of market cap. Many were pushed far down the list, and we saw that reflected in the rise and what really came out of it and what never truly recovered. Fast forwarding until today, we see Apple, Amazon, Google, Microsoft, Facebook, Alibaba, and Tencent. There is a very, very distinct pattern here with the top 7 companies. Well, it's interesting to say the least. Now, the reason I bring this up is because the companies that are around today may not necessarily be so prominent tomorrow. We see these 7 companies at the top. But what the future will look like in 20 years from now may be completely different. And each recession, or worse, along the way, changes that dramatically. So look back in the year 2000, and it seems like things have changed, but really, it's only been 18 years. Go back 50 years. Go back 100 years. And you can see that there have been few companies that have persisted for that duration. Many companies like Facebook, like Google, didn't even exist in this time frame. So we have nothing to compare them to. This whole technology sector is brand new. At the time, Microsoft was such a big company. And what about that stretch of Apple when nobody wanted to have a Macintosh computer? And then suddenly, they became cool once again. So there are big changes that occur. Remember that there might be entire industries that no longer exist in the year 2040. So your investments need to reflect that. Not to reflect necessarily PE ratios, profits, and other indicators that we look at. But you have to understand major market moves. And again, your portfolio needs to basically be invested accordingly. The reason I bring this up is because a lot of people believe that you can simply hold on for the long haul. And in some cases, you can. For example, if you held Microsoft in the year 2000, and then you saw technology shares dropping significantly, you held on for several years. Well, it would have taken you a considerable amount of time to get your money back, depending on when you bought in the first place. But most people buy in towards the end anyway. in the last, let's say, doubling or even tripling of their money, it always happens towards the end of a bull market. But we need to be aware of how things change. So today I'm going to go through a few things on how a portfolio should be structured. 99.9% of people are not actual investors, but they do put their money into different things, different assets. But I wouldn't call them investors, because investors make wise decisions and educated guesses. They write things down on paper. They speak to those in the industry. They speak to people who are in the know, and they slowly accumulate. Unless you're, of course, an insider to begin with, like Warren Buffett. But surely, these people are making decisions based on information they're privy to that we are not. Now, a portfolio needs to have, this is a perfect circle here, needs to have 4 assets. Okay? The average portfolio only has 1 asset. All right, this is going to take me a long time to type. Paper. For the average person, paper is 100% of their portfolio. They may invest in real estate, so they say, but really they're investing in a real estate investment trust. They may be quote unquote diversified, but they've got stocks along with bonds. They may be in indexes, but really they just bought a stock and it's an ETF. All of this is in paper. It's all paper. Even mining. Although perhaps you can say that this is straddling the line in between whether it is, let's say, precious metals or something and stocks. But it tends to trade like a stock, not like the commodity. And that brings me to my next point. Commodities and precious metals. Very important to have these as part of your portfolio. Commodities come in all different shapes and sizes. We have agricultural commodities, we have industrial commodities, and we have precious metals. I like to separate these two. I think it's definitely something that's very distinct. Now we can have our gold and silver. Okay, gold and silver, very important. But if your portfolio is made only of precious metals, you're missing out on the other asset classes. Commodities are a little bit more difficult to invest in. Most people usually purchase a ETF. Again, and that straddles the line in between the two. It's a paper investment, but it's investing inside of a commodity. Or you can say, I'm going to invest in this particular company like John Deere, for example, okay? And you think that tractors are going to be the next big thing because of the agricultural revolution, and so investing in John Deere is investing in agriculture. Not really, okay? There's a fine line there. So commodities are something that a lot of people stay away from because they don't know how to invest in the futures markets. It's harder to buy that as well. You can buy into companies themselves directly if you're an investor, but usually that's reserved for people with a lot of money to invest. So that's something here. I talk about it more in my first book, but I think that it is important at least to hold on to some precious metals, because precious metals, and you can ask anybody from the Eastern cultures, are very important to pass wealth down from generation to generation. That's the reason I like them. They do not produce income, and so we shouldn't keep all of our money in them. That's my issue with precious metals. It's not keeping money through, keeping its value. I know that if you give it to your children's children, their children, and their children, that silver and gold lump of metal, that's all it is just a lump of metal, is going to maintain some value. There may be no such thing as Facebook. There may be no such thing as Tencent. But I know that that piece of gold is going to be worth something, okay? But that means that it's just one piece of the puzzle. There's 4 pieces here, okay? And we're looking at the next one, which let me just write this for a second here, because I really want to talk about this. All right. It's business. I believe that business is very, very important to look at, to understand, and that every single person should be investing in business. Now, what do I mean by that? I bought Apple. I bought Amazon. I'm investing in business. No, you need to start your own business. That could be online, could be on the side, a little side hustle that you have, or that could be your primary source of income. There are many options today for people to have their own business started from home for $0. Many businesses are $0 businesses. You can get out there. There are so many tools that give you an advantage that are existent today that did not exist in the year 2000. Think about how many social media websites are around today. What are the fees for social media websites? How much do you pay for Facebook, Twitter, Instagram, Snapchat, and YouTube? There are 0 fees to use all of these platforms. You as an individual in your business could be marketing yourself, or better yet, marketing other people's business and making money from that. The average person doesn't know. I'd be glad to talk about this in the future. There's a lot of money to be made here with business. You can, do things on Amazon. You can do things on YouTube. You can do, write your own books. You can do all kinds of things. Tons of things, and using websites that are free today to earn an income. Now, why do you want business? I'm not a businessman. I don't have any ideas. I don't have this or that. You don't need to be that creative. I assure you, maybe you're not going to be the next Bill Gates. You're not going to be the next Jeff Bezos. You don't have to be. It's to make income from a separate source, a separate pathway that you don't have right now. If you invest in another company, you're giving up all your money to them. Why not start your own? Start your own. Maybe it's something small. Maybe it just brings you $100 a month, but that's pretty good. And that's a good way to start. Everybody always forgets about business, but it is so important to the whole entire portfolio. And of course, you can connect the two together. Like, for example, Mike Maloney. He invests in precious metals, but he has a business that sells precious metals. And then he connects in the social media with that, right? So that's something interesting. And then we have real estate. Real estate is something that the average person knows nothing about. Their investment portfolio exists in their own personal home. And of course, if I just say, personal home is not an investment. Okay? It is not an investment. It is a liability. It takes money from you every month. The only way I would suggest that this is an actual investment is that if you've split it up into multiple units and the unit rental income exceeds your expenses, then it's a business. But most people aren't like that. It's a single family residence and they live there and they pay the bills, their mortgage and their taxes and everything else. Real estate is an excellent place to have your money. I talk about this in both of my books. If you are thinking, well, I quite frankly can't afford real estate because I'm paying $1 million where I live to buy a house, I'm never going to be able to buy that. You have to think small. Think small. I've talked about this in my second book about thinking small, and that is very, very key in areas where houses are too expensive. But you don't necessarily even need to live in the area where you're buying. This is a business. Do you invest in Apple stock and you go to the Apple facilities, whether it is in California or maybe you go to the factory in China to make sure everything's good every once in a while? You know, you show up once a month, get your paychecks. It's not how it works. You use it as a business. Maybe you don't want to own property on the other side of the world, but it doesn't necessarily have to be in the same city where you are. Maybe you can visit it, you can see where it is. Other people can do the due diligence for you if you know somebody, you trust somebody, and you can basically go there. Maybe it's on the outskirts of town, maybe it's on the inside and you live on the outskirts. You can do things like this and you can profit from it. Your rental income exceeding the value of the home is what you need. I should say the monthly expenses. That's key. Real estate offers people a way to pass down wealth from generation to generation. Stocks generally cannot do that. Yes, you can sell the stock, but when you sell the stock, you have to pay capital gains. With real estate in the US, there's something called a 1031 exchange. When you do a 1031 exchange, you're basically selling the property, and if you roll that into another property, so for example, if you sell 2 units in order to buy one bigger unit or whatever it might be, you can defer that profit, those capital gains, indefinitely. That's a 1031 exchange. I talk about it in my books, okay? So this is something that is important for people to know. Being able to use all investments, not just one, okay? I know a lot of people who tell me that they are doing so well right now. They are heavily invested all their eggs into one basket. I know other people who don't do anything else but real estate. They're all making a big mistake. You need to own all of these. Now, personally, just so we're clear, I don't own any paper at this time. I sold it off years ago and have not looked back. I have my other investments which bring me income every single month. I have other things that I don't discuss on here, but it's important to be protected in every way. There may be a time in the future where I buy paper. I may want to, but I'm looking at it and thinking, what's the point when the other asset classes are more beneficial for every reason that I could get into paper? If you know what you're doing and you're willing to try really hard, you could build your own business, and your return on investment, what are some of the best returns on investments right now today when you look at stocks? Over the last year, realistically, are you going to be investing in 1 or 2 stocks? A lot of people, they just do that. FANG stocks. All right, so let's look at that, and let's say you've doubled your money in the last year. That's incredible. You do not find that, all right? Let's just say, though, you doubled your money. In business, if you've doubled your money from one year to the next, you have had a pretty bad year. You need to be multiplying your wealth so many times over. Business gives you that. Real estate doesn't in terms of appreciation, but what it does give you is your rental income, and you make money in 4 different ways. I talk about that in my book. Looking at paper, you get money every quarter if you're invested in dividends. If you're not invested in a company with dividends, you are basically just waiting on appreciation. When you sell, because you're going to have to sell to reap the rewards. When you sell, you're going to have to pay your capital gains. With a business, you can reap the rewards and the business can own everything. The business taxes are very low. In Canada, you can get it for 15% tax on your corporate tax. If you go to somewhere in the US, it's Delaware, you have Nevada, corporations that you can open, and the business will be taxed at extremely low rates. There are places that have no business taxes and all kinds of things. So there's a lot of ways to do this where you can profit big time, big time. Real estate has tax advantages. It has so many things that benefit it. Precious metals, I see differently than a lot of people. And of course, I like precious metals. I talk about them in both of my books. I think it's important, but that we need everything. And I know a lot of people are thinking, I can't afford it. There's a time and a place to buy everything. Maybe you can't afford everything right now, but you can afford just a little bit of this. And then maybe 6 months later, you can afford a little bit of that. And you go around and you invest this way. And I think that this process of accumulation is very important. Now, I've gone into way longer than I was intending on doing. I hope that this talk was something informative to you. I know that a lot of people have invested in things, and I don't mean any harm to anybody. I don't want to tell anybody what to do. This is not investment advice. I'm trying to give you some ideas in your head for you to think of. I think it's important to look at what you're investing in and challenge it, judge it. The more diversified you are, the better. If I'm looking at precious metals and somebody tells me that they have, 1,000 of this particular coin, you're not diversified. You need to have every different coin that you can get, different size bars, small things. You need to have junk silver. You need to have little tiny wafers of gold. You want the smallest denominations possible. You want to diversify into things created in this place and that place around the world, all over the place. Diversification, even within the asset class itself, it is absolutely critical to understand. That's all for this video. If you found it informative, please give me a thumbs up. I can do more things like this if you're interested in it. It's something I don't normally do, but that's all. If you found this video informative, I know you'll find my books even more informative. This teaches you the financial education that is simply not taught in schools. I get into a lot of the depth in the Money GPS. That's the book on the right-hand side. And then I fill in the blanks with the book on the left, Global Economic Collapse. So if you're interested in checking these out, just go over to the link in the description of this video. You click on it, it'll bring you to Amazon. You can flip through the book for yourself. If you're not too interested in reading the book, well, I have an audiobook version of Global Economic Collapse, and you can check that out at themoneygps.com.